As you currently view this weakness, this shift down in oil prices as an opportunity rather than a challenge. So does that mean you're putting money to work here?
Yeah, absolutely. Here at Tortoise, what we view this as, the energy market is down, but it's certainly not out. So at Tortoise, we look at the energy infrastructure sector and the energy sector in general and see these companies operating essential assets that are critical to the development of the global economy. So as the global economy develops and global oil inventories begin to decline in the second half of the year, we think the energy sector could be poised for a second half comeback, actually.
Second half comeback, but we've also heard from Iran saying that OPEC is looking to extend production cuts. There's a lot of questions about whether there's going to be compliance with those production cuts, especially seasonally, because we're in a different period than we were in the winter. What is your confidence that OPEC can hold to what it has promised so far?
Yeah, no, good question, Scarlett. I think, OPEC's mantra is basically whatever it takes. So whatever it takes to get global oil inventories back to the 5-year average is what they're going to do. And so that's consistent with what Iran just said. If that means they need to extend the production cuts, cut more oil out and take more supply out of the global oil supply, that's fine. They're going to do whatever it takes. And once we get back to the 5-year averages, that's going to be supportive for oil prices. As you see month over month decline in global oil inventories, you're going to see oil prices rise, we think, at Tortoise.
Yeah, once we get back, Rob, to those 5-year averages. But in the meantime, there's going to be some pain felt someplace. When you're selling less oil and you're selling for lower money, you're going to have some pain. So what do you avoid? You say there's some places to go in and find opportunities. What do you avoid right now?
Well, here's the thing that a lot of investors don't think about. The business of producing oil is basically a variable cost business. So oil companies in the U.S. are actually making money even though oil prices have declined. So since it's a variable cost business, sometimes oil field services companies, especially offshore oil field services companies and companies that operate those type of assets, actually don't earn enough money basically to be profitable in this type of environment. So we're avoiding those type of companies, offshore oil field services companies, but more so we're buying onshore U.S. infrastructure. We're buying oil and gas producers in the Permian Basin and other energy companies that are profitable even in this oil price environment.